Picture this. It's just a random Wednesday. The broader market is essentially flat, the Fed is being quiet, and then, completely out of nowhere, the modern fintech sector just drops this massive wave of news. Welcome to This Explainer, where we're going to unpack exactly what happened, because this single day perfectly illustrates exactly where the future of our money is heading.
Right, so while the rest of the financial world was basically taking a nap, totally distracted by the NBA finals, the fintech sector decided that this particular Wednesday was the day to just ship absolutely everything at once. I mean, it was this rapid-fire release of features and data that paints a really fascinating picture of exactly how these companies are battling to win your loyalty. To make sense of all this chaos, we're going to break it down into three distinct roadmaps. First up, SoFi's two-stack strategy, then Upstart's silent volume flex, and finally, Sezzle's super app reality. Okay, let's kick things off with number one, SoFi's two-stack strategy, building the AI front end and the crypto back end. So SoFi just unleashed this brand new AI financial coach to its nearly 15 million members, and it's aiming to solve a surprisingly simple problem. As their CEO, Anthony Noto, points out, the basic formula is just to spend less than you make and invest the rest. Sounds easy, right? But the execution is the hard part. Well, by connecting to over 12,000 financial institutions to analyze your spending, this AI is already pushing 70% of engaged users to make meaningful changes. 7 out of 10? That is real, massive behavior change at scale. And honestly, it's kind of like a magic trick. It's this brilliant, deliberate two-stock strategy. On one hand, you've got this highly visible AI advisory layer right in front of the consumer, keeping them engaged. But meanwhile, completely unseen in the background, Mastercard just expanded their 24/7 settlement capabilities to include SoFi USD across 8 different blockchains. They are building the flashy AI you interact with, while very quietly laying down the invisible stablecoin settlement rails that actually power the whole engine. But here is where things get genuinely baffling. Look at these numbers. Revenue is sitting at $1.1 billion. Loan originations just hit a record $12.2 billion. That's up 68% year over year. You'd think building a bank, launching an AI coach, laying down crypto rails, and growing loans by 68% would make the stock absolutely soar. Nope, the stock price was actually down 30% from its highs. It's like the market just hasn't quite caught up to their incredibly fast-moving product roadmap yet. Moving right along to number 2. Upstart's silent volume flex and the power of pure automation. Now, unlike SoFi's flashy, feature-rich ecosystem, Upstart went a totally different route. They just dropped their May origination numbers with absolutely zero PR spin, no theater, no grand announcements, literally just a single data table. Because when your entire business model lives and dies by origination velocity, you kind of just let the numbers do all the talking. And the number they dropped? Staggering. To give investors a real-time pulse on their machine, they revealed they're processing $58.2 million in loan originations every single day. Let's look under the hood at how they got there. That's $1.45 billion generated across exactly 25 days, working with over 100 bank and credit union partners. But the absolute jaw-dropper for me, over 90% of those loans were fully automated. Zero human underwriting involved. It is quite literally a pure lending machine. Printing $50 million a day completely silently in a really tough interest rate environment, it really makes you wonder, are they just genuinely confident? Or is this an aggressive flex on the rest of the industry? I mean, if rates actually do come down later this year, this automated volume has massive room to explode even further. And that brings us to our third and final pillar, Sezzle's super app reality, bundling to drive monetization. For years, all the experts said a true super app just wouldn't work in the US. Well, Sezzle is out here proving them wrong right now. After crossing $1 billion in quarterly GMV, they're just dropping features left and right. We're talking Pay in 5 for higher order values, an AI support bot handling 70% of inquiries, and extended lending. But the craziest part? They are now selling a $30 AT&T 5G phone plan. Yes, you heard that right. Your buy now, pay later app literally wants to be your mobile carrier. It sounds totally crazy, but the thing is, it's working. Of course, dumping a massive list of features on your users is totally useless if it doesn't actually convert into cash. But get this, Sezzle's new Earn tab alone just logged nearly 5 million visits. And the payoff is crystal clear. Users who engage with it generate 20% more revenue per active user than the ones who ignore it.
This completely validates their whole super app thesis. It's simple. Engagement equals monetization. By giving people a dozen different reasons to open the app every single day, whether they're getting cash back, paying off a loan, or literally checking their phone bill, they capture way more attention. And that attention directly translates into revenue. It's a brilliant way to lock consumers into their ecosystem. So stepping back for a second, this one Wild Wednesday in fintech showed us three incredibly distinct roadmaps for the future. SoFi stacking AI on top of crypto rails, Upstart quietly dominating with an automated loan machine, and Sezzle successfully executing the ultimate super app bundle. As all these incredible technologies continue to completely rewire how we handle our money, it leaves us with one really big question. Which of these strategies do you think will actually win the financial future? Is it the personalized AI coach, the silent automated machine, or the app that tries to do absolutely everything? Definitely something to think about the next time you open your banking app.